Hi there, I'm Julia, Global Director of the GRI Club, and I have here today with me Maja Procz. She's the Global Head of Transactions, Real Estate Markets from Commerz Real Ag, and we're going to ask a few questions. Thank you for accepting the invite.
With pleasure.
So for the first question, I wanted to ask you, what challenges do multinational companies face when operating in the German real estate market, and where do you see the biggest opportunities?
Well, I think each and any crisis has some opportunities. And what we are seeing these days from a global perspective, that for the first time since years, the different markets are in different cycles. I think within the rising market of the last 10 years, the market has been quite similar. And now we see that the US is, as always, a bit ahead of the market correction. Asia Pacific is in a totally different cycle, and Europe is even fragmented. I think UK is ahead of the German market, and each and any market has some opportunities, but as well as some challenges.
Yeah, we are seeing that we have a lot of differences inside the markets of Europe. Just like you said, Germany and the UK, they are very contrasting, I would say, right now.
Definitely.
So for the second question, I just wanted to ask, in light of concerns about contagion from the US commercial real estate market spreading to Europe, what measures is Commerz Real Ag taking to safeguard its investments across the region?
Well, so we have a big portfolio in the US, over 3 billion euros. So that's after the German market, our second biggest investment market. And we have opened a new office in New York 2 years ago, really to have as well an asset management focus on our assets there. It's very important to be in the US on the ground, especially these days where the market, especially on the office sector, is quite challenging. If you discuss the back to work situation, it's different than in Europe, and very different than in Asia Pacific, because there everybody's back to work. In Germany, we are probably quite good. And in US, I think people are still very resistant on going back to the office. And I think if we are having talks to people in New York, but as well on the West Coast in San Francisco, for instance, office becomes a bit more toxic issue. It's a new retail, so to say. And but we are strong believers in the office market, and there are opportunities arising out of that. Yeah.
Great. And what about how does the outlook for office investments in Germany compare to the US market specifically? And what are the key drivers shaping your investment strategies in this asset class?
Right. We have no allocation of money to certain markets. At the moment, we are completely driven by opportunity.
Okay.
So our fund management is getting nearly 4% for cash on account, and each and any real estate needs to beat this. There needs to be a risk premium to be invested in real estate. And from that perspective, it's called find the truffles. And that's what is the challenging thing for the investment team these days. And it is well time for the asset management in all of the markets. In Germany as well as in the US, you have to lease up the vacant space. You have to be in contact with your tenants. You have to find a strategy for your portfolio. And I think what is really positive for us, we always have been focused on multi-let assets in Germany as well as in the US. And this helps in the crisis as well, but as well in the market of rising rents.
Okay.
So what we are seeing, we have a very core portfolio, and in these kind of core markets, we see rental increase. And with a multi-let building, you can benefit from that because you can create these days value.
Okay. That's really nice to hear. We were also talking about ESG standards in the discussion. So I wanted to ask you, in what ways are these evolving ESG standards and regulations impacting your selection of real estate investments?
Right. I think we have all our funds are already classified Article 8. From a real estate perspective, ESG is a very important topic for us. So we have an own evaluation tool for ESG components. Each and any asset within our portfolio is classified. We have a clear view on the trending point and on the creme path. And for new investments, each and any opportunity has to go through this analyzation process and has to contribute in a positive way to the different funds.
And last but not least, I wanted to ask you, what did you enjoy the most regarding our women's meeting right now, the discussion, and just around participating in the event as a whole?
It was a very lively discussion, so very different views, but as well a common sense to remain positive, to look forward, to take the best out of the situation. And I think the crisis, it's not the first one, it will not be the last one. We are now back in a cycle, and I think what we experience as well, it's now back to real estate. It's really the underlying fundamental of a real estate, and it's not about financial engineering any longer. And so going back to the basics, it's a very positive sign, at least from my point of view, for the industry.
Great. Thank you.
Great pleasure. Thanks for having me.